Hey guys, welcome to this video. Just going to run over the S&P 500 E-mini futures market, just because you're getting further and further rallies at the moment. You've currently got FOMC press conference for today, just after your Fed meeting. Lots and lots of things being said, really about reaching inflation targets, cutting rates, things like that. So a general, overall, quite a good consensus for what's going on in the US. That's why you're getting this massive rally. Really, it's because the optimism is flowing from the investment in the US dollar into the stock market instead. I covered that on my screen. I covered that on a few videos. And also, don't forget, my free training is underneath this video too. So, of course, you've seen 1, 2, 3, 4, 5, 6, 7. Like I said, 7 weeks up, it's brought your stochastic oscillators all the way up here from down here. And you've simply moved from what was fear, okay? And we had that around October time when there was global tensions, etc. There was a lot of worry about what way the markets were going to turn. Global economic outlook as well was a bit rocky for some. And that's why you fell down here. As I always say, you should really be buying into the fear. When people are scared and the market falls, that's your time to get great market value and therefore your entry. So I called it long many times. I spoke all about these key price action levels, key rejection levels, and the impending change. And of course, the market is well up. So we killed the longs. We got out. We said, you know what? Price has gone too high for us, and we're coming up to previous highs now. Now, that fear I labeled, it suddenly starts to change to optimism. Because like I said, the comments from the Fed start to give people the indication that maybe, just maybe, their money is better spent in the stock market than it is buying US dollars. Because of course, if the rates are coming down on savings interests, people don't really want to save those US dollars, and they would rather take the money, put it in the stock market. And that's why it's coming up and up and up. Now, just the same as you had a change in direction or a change in sentiment as well in your S&P when you fell, okay, you were at a state of fear, people were terrified, scared, and then you've gone to optimism. What will start to happen again is ultimately you will get the fear. Now, some people do believe, they really believe that the market never falls at some points. They say it's going to go up forever. They're terrified to get short. And that is the key with trading. The people who lose money en masse are all the people who will not short the high prices. They will buy them instead. So they buy on optimism. They don't buy on fear. They buy on optimism. And the problem with buying on optimism after it's affected the market is naturally you get poor market value because you're getting long at what is inherently a high price. If you look at the overall market very long term, look where I've drawn I've typed the word optimism, you can see it's far, far higher than you've ever been before. And you can see where I've labelled here, the fear comes into the market, ultimately it falls. Now you had optimism down there and you had fear over here. And like I said, ultimately the fear will come back in the market and you'll be looking for optimism down here somewhere when it pulls back. Now, ideally, if and when it does, okay, and this is why you need core risk management rules. This is why I spend so much time teaching people. You need to be able to more or less short at this point, but not be someone who thinks that is going to be the be-all and end-all. You need to realise that it could be the case very well that it can get higher than the previous high. All of these areas I'm labelling, however, everything up here is still what is going to give you short value because it's naturally a high price. If you come off your computer, you will always sell at a high price. When you go to sell anything you own, you will ask for the high price, or at least in most cases. So if we go up here, I'm further short via DCA. I'm going to dollar cost average, or basically short more into the optimism for the impending fall lower. And I'll look for exits probably near a 454 if and when we get there. Now, the reason why I don't panic and lose sleep at night is because I can really drop my size. I know there is a lot of optimism. I know the market's moving up. So I can drop my size in case you keep rallying and rallying and rallying. And as Fed comments done now, you've got your meeting going on. There's tons coming across the wires now, which is why you're still seeing this push up. Okay, you may find you get a chance to short the impulse. In other words, because you've had such a rash up move on lower time frames, you may find you get a sudden drop. But like I said, anything around here, I'm waiting for the impending fear to come into the market. If you don't believe me, that's the case. Look here, look there. Okay, you've got minor falls on the way up, but ultimately you get a much larger one that brings you so far down. You've also got a fall here. So some people are very worried about shorting on Optimism, but you really shouldn't. At the end of the day, that's the only time you're going to get short side value. If you've got risk plans and you can hedge the market and you can space your entries out far enough, you will survive for when this big fall comes. And like I said, inevitably it does. But do not pretend, on the other hand, as well, that you won't get over this high and the US stock market won't get higher, because it can. And I really wouldn't be shocked if it will. But nonetheless, I'm always going to be short anyway. So thanks for watching, guys. Get my free training underneath. I'll see you in the next one. See you there.